Welcome to the Investment Process Channel. I'm C3 Christopher Campbell, where we uh, figure out how to create generational wealth while minimizing risk. Welcome back. What we'll be talking about today is trend structures. So this is a good one. This is our bread and butter of trading. Whether you're a day trader or you're swing trader, you have to know your structure. So let's get into it. So typically you hear about it all the time: a bullish market and a bearish market, upward trend, downward trend. And then every now and then you'll hear people say, well, the market is sideways, which means right now it's indecisive, or it's the market is kind of consolidating because it's probably been in like either full upward trend, and now it's trying to figure out where it's going to go, if it's going to still go up or it's still going to go down. So you'll see typically small or sometimes large excerpts where the market is what they call sideways. Regardless if it's sideways or not, you'll still see that the market will always, if you look at the structures, you'll see it's always trading between several different ranges. And right here, what we're going to do is talk about those ranges. So if you look at the bull trend, the upward trend, you'll see here, which the HH and the HL is the market starts down low and it creates a new higher high where it breaks some sort of resistance going up, and then it'll create a higher low. So it won't go all the way back down. It'll create a higher low, and then that will be its new range for the low range and the higher range. Then once it happens, it'll pull back, and then you'll see it shoot past that resistance again, the higher high, where the new resistance is, and then it'll break that resistance and go to a new higher high, and then it'll create a higher low, and then it'll create two new ranges in which the market will start trading in. And typically, as you see here, textbook is like that last higher high typically becomes its support, and then that will be your higher low. And then once it hits resistance, which is your new higher high, then it'll break through that. And then vice versa on a bearish trend or a downward trend, it's the opposite, right? So your price point is up high, and then it breaks through some sort of resistance, and it creates a new lower low, and then it'll come back up to that support where that resistance was, and creates a lower high from what it was previously. And then your support where that new lower is, excuse me, that the lower high is your support, your lower low is your new resistance point. And then once it breaks that new resistance point for the lower low, then it'll create a new lower low, and then a new lower high where there will be support there, right? Excuse me, yeah, there will be support there to show that the market is still in a downward trend. So you'll see the resistance and the support flips around either on bullish or bearish trend. Bullish trend, your resistance is typically at the top of your price, and your support is at the bottom. And on the bearish trend, it's flipped, right? Your support is on the higher price, and then your resistance is on the lower price. So depending on which way the market is going, your resistance and your support will switch. So when you hear them talking about resistance and support, always understand which way the market or your price action is going at that point in time. Um, Going back to the range where it's sideways, you see, it's like pretty much like an even high and an even low, where price is just trading between two ranges, right? So when I talk about changing of character, so you see here we have a downward trend, or what they call a bearish trend, where we have the lower low and the lower high, preceded by another lower low and another lower high, and each time is breaking structure to a point where the lower low and the lower high, it starts meeting resistance, and you have your support at that point. So as you see here, each time the lower low is established, that's support when in a downward trending market. So your lower low would be your support. Your lower high would be your resistance. So at those 2 points in time, you'll see price go to resistance and then come back down and maybe hit support, and then maybe proceed past support. And then you know that at that point in time, the likelihood of the market still moving down is high. So with that being said, you see here, once the once price hits its lower low and it reaches support, and then you get a little resistance here where it just kind of trades between those two ranges. In that range between the resistance and support at that point in time, then you'll see it test the support below before it takes off and goes back to a higher high when the market changes from a bearish market into a bullish. So what we do, what I wanted to do is take you into a chart in MetaTrader 4, and we're going to be discussing these simple techniques, being able to see support, being able to see resistance, depending on which way the market is moving at the time, being able to recognize when the market is starting to go sideways, when it's in a downward trend, and when it's in an upward trend, and being able to recognize exactly when that's happening as it's happening, so that you, and a lot of times, majority of my peers, we sit and wait a lot of times. And I know everybody thinks that traders are always in the trades, but a lot of times that's not the case. We're looking for, especially our peers, we typically trend trade, so that means we're following the trend of the market and not so much trying to predict where the market is going. So let's get into it. Let's go over here to MetaTrader 4. So here we are in MetaTrader 4 again. Right now I'm trading my tool that I trade is Japanese British pound yen. This is the hourly chart. So I wanted you guys to see. This is exactly textbook, exactly what we just got through looking at. Whereas you see price action here. I don't have any line. I don't have it set up to draw lines. So we have price action here. Let's look here. So between these two lines is a range where price is trading, and you see if you look at the go back and look at the picture that I just showed you, you'll see here this is a high, and this is your lower low, and in that case, this is your support line right here at this point. And at the top right here is your resistance. So you see price go up, it hits resistance, then it goes down where you see support, and then you see it bounce back up. And the reason why I'm saying this is because, as you see here, we're looking at a downward trend for our price action. And again, if you step back and take a look, you see it as it's happening. A lot of times we don't see it, but this is textbook. You see it go down, and you see it hit support, bounce back up, and creates what? What did we just say? A lower high. So right here, it created this lower high. And then what does it do? It breaks resistance and shoots down. And what does it do? Create another lower low. So we have this first lower low, and it moves down to this lower low. This is our first high, and this is our lower high. So that is textbook for a structure system set up for a downward trending or bearish price action. So as you see between these levels, let me see if I can do this here. Let's start this. And then we have this here. What I'm doing here is I'm changing the color so you can see the difference in the two price actions. So this is our high, this is our lower high, and this is our low, and this is our lower low. So you see the difference between the two in the price action. And as it goes, we can move it here. So whereas this is our lower low, right? This is our lower high. Then we have here a new lower high, right? Let me put that right there on top of it. So this is our new lower high. And since this was our lower low, and now this is our new lower low right here, we look and we see right here where there's a new lower low. And it just repeats itself. And this is like textbook here, whereas each segment, and this is on an hourly schedule, so you see here this happened between the 8th and 9th. So this happened pretty much within a day, where price goes down, it tests support, pops back up within the range, creates a lower high, creates a lower high, and then breaks structure and goes and creates a lower low. So that is a typical setup for a bearish market, or bearish price action. And then we get down here to where you see price action sets up a new range where it goes from bearish to what they call consolidation, or price going sideways, as they say, within these price points right here. So right within here, and I'm pretty sure if we go down to a smaller time frame, probably like the 30-minute or 5-minute, we can see how price just kind of bobs in between this range right here before it decides to create a higher low. So right here we have our breaker structure where this breaks support, and it comes down here. Then we have our lower low, and then our lower high, and then we have a resistance right here. Excuse me, we have our support right here because it was downtrending. This becomes support, and then shortly after that, you see right here we created a higher high instead of a lower high. So now price point is trading within that range. So if I just highlight this right here, this is when price action begins to change its momentum. Once this happens, we can take a look, and let's just go over here. Let's zoom in a little bit. And we'll see how price moves from a consolidation, which happens within a few hours, to changing momentum into a bullish market where we look at things differently. So it's just a flip. It's the same terminology, but it flips different. So let's go ahead and set up some here. So right here, this is our lower low. And this is a higher high now. So this is our low, this is our high, and this is what it's trading between, right? So this is our range that price is trading between. And right away we see there's a change. We now have a higher low and a higher high. Once this happens, your resistance and your support switches. So now this line up here at 165 is now your resistance, because it's moved into a bullish market where it will keep testing resistance, and then you'll see a breakthrough, right? So again, we're seeing here that the market is now changing its form, right? So here we have a higher low, and then we can just go ahead and move this here, and we see now here's a new higher low, right? Get that off of there. So now we have a new higher low, right? And this is what they mean by sideways. So we'll see price action come up here. And you're like, oh, this is a new lower high. This is what it means by sideways. So right here, the market's still trying to figure out what it wants to do. And you see up here, right here, you see some of the new higher highs forming like almost dojis, where price action is still trying to figure out exactly what it wants to do. But if you take a second and step back and take a look, you'll notice that in these moments, price action is what? We're creating a new higher low, going along with a higher high, where there's resistance. And then it breaks resistance here, and you see it creates a new higher high, right? And now it's in the process of what? Breaking that resistance again. So this is like the perfect example of the perfect storm of when the market is in a downward trend, then it switches into a sideways trend, and then moves into a bullish trend. Most people don't get to see it as it's happening, especially when you're new. You don't really get a chance to see it as it's happening, because you'll go back and take a look like, oh, that's what was happening. And a lot of times you'll get caught short or you'll get caught long, and the market is moving in the opposite direction. And this is one of the key points of understanding structure and being able to see it as it's happening, and taking a moment to look at the market for what it is. And if it's sideways at the time, maybe it's time to do nothing. And depending on the range of the price action, maybe it's time to do nothing. And then once we see the momentum has changed, either from a bearish market to a bullish market, or a bullish market to a bearish market, at those points, then we'll take action and start trading within the new ranges that the price action is showing us. So I hope this tutorial was helpful. If it was, put a thumbs up down below. If you have any questions and concerns, please put it in the comments below. Thanks for joining the channel again. Again, this is C3 Christopher Campbell with the Investment Process Channel. Have a good one.